It's a race between supply and demand. Who will win? Well, whoever does will dictate where our housing market is headed. So last week I had a lot of positive news about the housing market, and this week still some positivity, but maybe a few cracks. So let's get into it. What happened last week? Well, the jobs report came out at the end of the week, and it was a blowout jobs report. Employers added 353,000 workers to payrolls. Basically, this was about double the expectations. And the reason this is important is because that's not really good news for mortgage rates. The strength in the economy is the opposite of what the Fed is trying to do and tame inflation and slow things down. And so when we see resilient jobs reports like this, it is not helping the cause for the Fed to want to cut rates. So speaking of rates, talking specifically about mortgage rates, according to Mortgage News Daily, we had the biggest one-day jump in rates in over a year. So we ended the week last week a little bit higher than where we had been. Nothing too critical, but it was the wrong direction of what we've been hoping for. So they say, consider this, both of the past 2 days saw the biggest drop in mortgage rates in more than a month. They're referring to the end of last week. This was published on Friday. The 2 days before that were also slightly stronger. Mortgage rates on Friday are roughly in line with last week's highest rates, despite the fact Friday's change from Thursday is the largest since October of 2022. So not terrible news for mortgage rates, but certainly not the news that we have been hoping for rates. We kind of went back a little bit. So let's talk about the Fed. They met last week and they left interest rates unchanged. Not a huge shock there. They also said that it's going to depend on what other data they see to determine what they want to do in March. I don't think it's likely the committee will reach a level of confidence by the time of the March meeting to identify March as the time to cut rates. Now, this was stated before we got that crazy jobs report on Friday. That basically took away any hope of rate cuts in March. We are certainly looking beyond that for when the Fed decides to cut the federal funds rate. Now, as I always say, this is not the mortgage rate, but it's something that we need to follow because it does influence how markets react and then what happens to mortgage rates. So that's what happened with the Fed last week. Now, I mentioned a little bit last week about listings starting to increase, starting to see more homes come to the market. And this is another story this week. Rate drop leads to third consecutive month of listing gains. Active and new listings experienced single-digit increases for the third consecutive month in January. This is according to Realtor.com. And I'm going to get into what we're seeing in Phoenix here in a second, but basically they're saying that these mortgage rates coming down is easing the lock-in effect, whereby homeowners don't want to move because their their rates are so low, there's no incentive for them to move. And now that rates are coming down, they may be a little bit more interested in moving, and that is creating some more inventory out there. More than half of the 50 largest metropolitan statistical areas in the U.S. experienced a boost in new listings during January. Denver up 21%, Seattle up 20%, Miami up 20%, San Diego 18%, San Francisco 18%. Now, they're also saying that the boost in inventory has created more competition among home buyers and brought down the number of days on market. And specifically, they call out Phoenix, saying that they've had 14 less days on market, or homes have sold faster in January than they had last year at this time. So let's take a deeper look at what's going on in Phoenix in terms of supply and demand, of course. And by the way, if any of this is helpful to you, make sure to hit that like button and share with someone who might be interested. Now, the Cromford report is saying that our new listings year to date are at about 8,981. That has come on the market over the last 4 weeks, and this is the highest total we've seen since October of 2022. It's actually a 16% increase over this time last year. So what that data was saying about more homes coming on the market, maybe the lock-in effect easing and allowing sellers to be more interested in listing their homes, we're certainly seeing some of that happening here in Phoenix. Now, this is our number of new listings on the market, but let's look at our active listing counts. Where we stand today is still pretty low as it relates to a normal market, But you can see we've started to increase since the beginning of the year. And with our demand being relatively low, only seeing about 4,000 closings per month, that's keeping this supply level pretty healthy. Now, speaking of demand, that's continued to rise as well. So if we look at the number of listings under contract, this is up 43% since the beginning of the year. And the Cromford report is saying it would be reasonable to expect our supply to actually peak where we're at now and start to fall as we get into February and we see the demand continue. But will that actually happen, or are we starting to see a little bit of weakness in the market? It's hard to know for sure. We've actually had supply and demand moving together. So last week, supply was around 63 and demand was around 73, 74. So both have moved up. So our CMI overall is not changing all that much. Now, technically, since we're over 110, we're in a seller's market right now, but it doesn't really matter if supply and demand keep moving together. We're not going to see one or the other move us in the direction favorable more for sellers or for buyers. Last week, when we looked at our chart of all of these cities, everything was green. This week, we've got a couple red arrows. Fountain Hills has gone down and Goodyear has gone down. Everything else has moved in that direction, favorable for sellers, towards a seller's market. Of course, anything over 110 indicates a seller's market. So we're looking at Peoria up to Chandler, technically in a seller's market, according to the Cromford Market Index. And then Cave Creek, Surprise, Paradise Valley, Goodyear, all in that balanced range. Queen Creek, Buckeye, and Maricopa are in a buyer's market still. Overall, the increase of all of these cities on average was about 10.5% over the last month, and last week it was 12.4%. So you can see we've lost some momentum on that movement towards a seller's market. Now, the Cromford report is talking about some different sections of the market that are behaving a bit differently, and I want to share that with you guys. So they're saying that supply is mounting rapidly in more expensive locations. So you can see Fountain Hills is one of those cities that moved in a direction favorable for buyers, and that is one of those areas where you're seeing more supply. Also seeing more supply in those areas that are more affordable and a bit more distant from the central Phoenix area. And everything in between is faring pretty well. The mid-range areas that aren't too far from central Phoenix, like Glendale, Tempe, Chandler, Gilbert, Peoria, and Phoenix, all of those seem to be pretty strong. And they say that price increases are anticipated in those cities. But those higher price range cities are seeing this flood of new listings come to market and creating a lot more competition for sellers. They said that Paradise Valley has more single-family homes available now than at any time since November of 2020. Carefree is in a similar position, the most homes for sale since July of 2020, and Rio Verde is showing the most homes available since December of 2017. So with all of this supply in those cities, sellers might have to compete a little bit more, so they're anticipating seeing some price cuts potentially in those cities. I thought this was a fun fact. Believe it or not, we have 71 homes listed on the market for $10 million or more. And get this, we've never seen more than 29 homes in that price range closed in a single 12-month period. So the Cromford report is saying if you are a seller in that area, you may need to be very patient or flexible because it seems like there's a lot of competition out there for you right now. So who is going to win this race? Supply or demand? Who is going to break out next? I want you guys to comment below. Let me know your thoughts. Is demand going to turn up as we get into the spring selling season, or is supply going to outweigh demand? Put it in the comments below. Of course, today I'm talking mostly about resale homes, but there's a lot going on with new construction, a lot of incentives you can get if you're a buyer in that area. So if that interests you, make sure to check out my latest video about new construction don'ts right here.